Hey guys, my name is Joanna. I'm the co-founder of Soon Network. I'm here joined by the PACT Consortium. And PACT in one line is providing a platform that powers a end-to-end on-chain credit management system for fintechs and help them evolve into crypto-powered neobanks. And PACT has been doing an amazing job. Just in 9-month time, it has already secured $2 billion credit origination. It's a platform to watch on my list. And today we're actually doing this in a really interesting format. First time we're having the entire team joining us. So this is the PACT team, the PACT Consortium, and we can maybe go over each person's role as we starting the question. Let's start with some personal background story. Maybe Fabian, you can start as the CEO of the company. Personal experience had led you to start the company? What's the vision for the company?
So, career story, I'm a former banker, recover banker. I started my career in Paris on securitization and commercialization of products in France, in Luxembourg. And I had a crazy idea of marrying an American woman, which I followed back to the US. And I encountered difficulty banking, credit history, borrowing, and all these things were actually not available to me, even if I had a huge history in France and pretty wealthy for most French people. And that's how I started to dig. And actually the first banking I did back in the US in 2014 was actually using Bitcoin as a medium of transfer for part of my wealth. Mm-hmm. And I went to the rabbit hole and started to found a company back in 2015 and find my co-founder a few years later, built an incubator in Berkeley, focusing on mobile banking in emerging markets to solve this exact same problem for 6 billion people. People forget that the US is 300 million people, but there is close to 8 billion people in the world, and the US is only 5% of the world population.
Right.
And 95% have problem borrowing every day, and hopefully we can solve this problem with this team.
That's awesome. And how did you guys meet, you and Xander?
Crazy stories on there. Go for it.
Yeah, go for it.
So earlier in my career, I was running origination businesses. I was a student loan business. I was involved with a mortgage company. And so I was actually issuing these loans. And subsequent to that, I was working in venture capital. And through that, I met Fabian. And it didn't make sense. We didn't do any crypto. But Fabian described the potential of the technology that he and Eric and Dylan were building. And I thought back to my time running the student loan business, and I knew the accountants and lawyers, I knew their names and their faces, that their software, in part, among many things, replaced. And I knew how expensive it was to trace all of this information about how the loans were structured, such that the money from borrowers could go appropriately to the ultimate holders of the loans, the owners, the investors in the loans. And I knew how much that cost. And I knew how it made borrowing more expensive for the consumer, for the user. And Fabian, Eric, and Dylan were building something that just massively reduced that price. And so I had lived the experience of the slowness of the traditional way to do it, and I could sort of viscerally feel it right away. And so I wanted to get involved.
Yeah. And can you, Ryan, I think you might be the best person to describe what does PACT do? What kind of pain points is it solving?
Absolutely. So I'm Ryan Mingo. I am the founder and CEO of Tiberia Capital. I spent my entire career as a credit investor, and throughout that entire time, I saw the same pain points again and again with different flavors, different exact headaches they were causing. But one thing that I got extremely excited about after about 15 years at various large asset managers was the sea change we were seeing that technology was unlocking. For every dollar of equity in the world, there are $4 or $5 of credit, and most of it is issued, borrowed, managed, paid back in an incredibly cumbersome way. And as I was starting to think about what I really wanted to do to address that, I was put in touch by someone who works with Xander, who had worked with me many, many years ago, several careers for both of us prior. And I got incredibly excited about what PACT was doing to really solve the entire life cycle of credit, from how borrowers are underwritten, how funds are dispersed to them, how payments and tracking and record keeping are managed, and then also how all of the documentation that goes with that happens, all of which usually is just in the background before the actual end investor, right? The person who's putting their money into a fund even sees any of that. I worked for an asset manager that had $45 billion under management. We grew a specific collateralized loan obligation business there to over $12 billion, and in most cases, every single trade we did was literally signed in paper with wet ink. Then I worked for a private equity firm that was focused on technology investments, and yet at the same time, our asset-backed securitizations, the trustees were sending Excel sheets and flat PDF files. That just doesn't have to be the way it is. And when I was put in touch with the PACT
Talking
team,
about
I
industry
got
that needs to be
incredibly
disrupted,
excited.
right? Yeah.
Exactly. This was what was going to change, and this was how we were going to do it.
That's awesome. And I know, Eric, you're the CTO. Tell us a bit more about the infrastructure underneath. How do you, come up with a stack that actually can handle the kind of workload that you guys are handling?
Yeah. So I'm Eric. I'm a co-founder and chief product officer.
I'm
joined by Dylan, our CTO.
Dylan, you guys both.
And maybe to tie this in actually to the origin story. So,
please.
We had met Fabian back. We were the main project within his incubator in Berkeley. And, he was obviously very excited about this idea of mobile banking on-chain, non-custodial banking on-chain. And we were working with several different protocols, helping them vertically integrate a lot of mobile wallet with their protocol. And he was pushing us towards microcredit as a use case. The basic idea being, he saw what was going on with all these RWA protocols, where they were leveraging blockchain effectively to just sell assets onto this population of internet investors. They were not leveraging blockchain to actually improve the way that a loan gets originated and serviced. And so he saw basically the key missing piece is that the downstream activity from these RWA protocols needs to be brought on chain such that none of those actors can act maliciously, because every action that they are doing with your money is happening on chain, which means we can enforce rules related to those actions on chain. And so when you invest in a fund on a platform, for example, and part of the rules is that you cannot lend this out to some subsidiary company of yours. Yeah. We can actually enforce those rules programmatically on PACT, because we've brought the entire value chain down to the end borrower taking out the $50 microloan natively on blockchain. And so how does this tie back to what we're doing? If you want everyone from the investor sitting in their penthouse in New York, LPing to Ryan's fund in New York, who will invest it in one of the debt facilities on our platform, which may be ran out of the Philippines, for example, given to a fintech lender there, ultimately to some end borrower in the form of a $50 or $100 microloan. Every single actor that I just walked through needs to have an embedded, very user-friendly crypto wallet that they can use to sign transactions on chain. And importantly, as we enter this new phase of the company, and for the protocol, custody stablecoins throughout the entire value chain. And so by bringing all of these stakeholders on chain, when that end borrower repays their loan, instead of it going from layer to layer to layer after 30 days of the cash sweeps being ran, it can now be zapped through that whole structure instantly while preserving the structure. We're still working with folks like Ryan to establish the structure and run a proper SEC registered fund, or whatever filings need to be done to do it legally and compliantly, but without the counterparty risk, without the cash drag that you see within traditional markets.
Fascinating, And
anything you'd want to add to that, Dylan?
I think just from the infrastructure side, I think, a lot of times we touch on how we're reducing this counterparty risk, but another big part of it is actually off-chain addressing and analyzing the risk beforehand. And that's a place where I think we've more recently begun to appreciate that putting this data on-chain, it kind of acts as a preliminary cleansing layer where we have a handful of employees that have come from our TradFi competitors. And I've been hearing from them that as many woes they had would be they'd have some client that would be giving them data that would change daily, that the schema would change daily, and that was a huge pain point. But because this all goes through our on-chain contracts, it's always going to be in the same format, which means not only do we get it in real time, so as originations are happening, rather than, at the end of the day, end of the week, it's also going to be very clean. And so we can guarantee that our analytics are going to be as accurate as possible.
Yeah, so you mentioned something interesting, right? So you almost like creating a brand new category that we haven't seen in Web3, right? You're basically almost rivaling a Web2, TradFi competitor. So in order to do that, I think high performance is really important, right? When you think about handling the type of performance that we've seen in the real world, how do you choose your infrastructure partner when it comes to the requirement that you need to see on the technical side?
Yeah, so I think where most of our load comes is the on-chain load, and that's where largely I don't think this would be as possible on any chain other than Aptos. I think I would point to back in January or February, we were onboarding a new originator for a facility, and part of that is seasoning their books. So we have we have that data on chain so that we can programmatically enforce, these covenants for facility. And we sustained around 1,100 TPS for around 3 to 4 hours. And it was under like $5,000 in gas, which I can't say we could have done that on any other chain. And so that's kind of our, where any bottleneck would be with being a non-chain protocol is going to be the throughput of the chain itself.
And latency, right?
Yeah, it's 80 millisecond transaction time on Aptos and only getting lower. So it's,
Yeah, you guys been doing an incredible job ever since you migrated to Aptos, right? So now your handle, I don't know the exact number, I don't want to misspeak, but majority of the RWA volume is currently on PACT. So how did you get to that? Like, what kind of go-to-market made you achieve that kind of volume?
Well, part of the core of what we do, and it came, I think, in part from my experience running origination platforms. Like, I know how hard it is to find customers, to maintain the regulatory burden, to ensure you're compliant within regulations in multiple jurisdictions, to find customers, to do the underwriting. It's a whole business. And what we build are the pipes for that business. We build the financial plumbing that empowers those businesses. And so we took a go-to-market strategy that involved partnering with those firms. So rather than trying to build an entire origination business ourselves, we went to existing firms, fintechs, neobanks, who had done that hard work.
Right. So you're using their rails.
Yeah, we're using their existing business and pulling it onto our rails.
Thank you. I think what we try to achieve is we recognize that the best lender in every market are very specific, the same way that the big market is specific to every market is being sold. And it's impossible for us to be fluent and competitive in 150 markets. Regulation, different, way to consume credit in some countries actually ban. What we try to do is we try to actually empower each of these fintechs in each of these countries to be the better of what they can become. Think about us of trying to create basically like a master franchise where we provide the capital to the most performing fintech in every market in the world, while also offering a framework and maybe a securitization framework for each of them that helps them scale their business and empower millions of people in every market. And you can see as maturity comes in 1 or 2 years where money will flow not to the most connected people, the money will flow to the most performant underwriter and that in real time. And that's what we try to strive for, the team.
Yeah. Yeah, so you're running the B2B business, talking to the asset managers and getting them onboarded, like Ryan's funds. And so how do you scale that? Because I used to run BD for several protocols. It's a very hard problem to solve when you try to close these partnerships that can take longer sales cycle. So what's your secret sauce for that?
Yeah, well, I think a lot of the secret sauce with the originators lives with the PACT team, but I think, they refer to it as the capital markets as a market for a reason, right? People want capital, people have capital, and you need a literal network effect to make that market happen.
Right.
And so you do have to start somewhere. We've seen a lot of our greatest success in geographies where the banking infrastructure is the most inefficient, where it's the most absent in some cases. There's several jurisdictions we really like investing in where the rule of law is great, the macroeconomics and demographics are great, but the banking infrastructure, to Fabian's point, exists to serve the ultra-wealthy.
These are emerging markets?
Yes. What's an emerging market these days, right? But yes, not the U.S. The U.S. there's a lot of problems to solve here, but, we have had enormous success partnering with originators who, in many cases, have had no problem raising venture capital dollars, right? But in order to really scale a financial services business, to scale a lending business, you can't do that entirely with VC money. And so we've partnered with these originators and said, hey, you know what? You're going to have to take a little bit of pain getting this onboarded because you do need to implement this, right? And we don't want it just on the loans we're originating or we're financing. We need it on everything because this needs to be how your rails work. But we actually just less than a month ago had an originator thank us for making them do that as we got refinanced by a facility 5 times bigger and about 7% cheaper. That would not have been possible without them doing all of the the things and embedding all of the technology that was necessary for them to onboard our capital and be part of this ecosystem. And by the way, that new lender is not a blockchain native fund. They are not a tokenized fund. They have a tokenization on the agent on that facility. They saw the power of what happens to this lender's operations because of tokenization. And even though they're not Web3 native, you would not find them on any blockchain social media, not at any blockchain conference. They kept the tokenization.
Gotcha. So at the end of the day, what I'm hearing is, the automation of the process, right? You're creating this framework regardless of the jurisdiction. How do you solve this, I'm just thinking out loud, how do you solve this like regulatory hurdle, when it comes to like 150 different markets? Like how do you streamline the rails there?
Yeah. Well, I think as the resident stick in the mud who always wants to do things a little slower, make sure we spend a little more money with the lawyers. That is part of the challenge, right? Every jurisdiction is unique. There are certainly some that are more friendly to this than others. And there are some great economies with people who really want access to capital where this is effectively a no-go zone. And that's too bad. But there's also a lot of really exciting jurisdictions where you can slot, again, to Xander's plumbing analogy, maybe you can't run the plumbing all the way from the reservoir to the spigot, but you can put in pieces here. Like even in the least crypto-friendly jurisdiction, you can still implement major portions of the data layer here. Right? You don't have to transact value on it. I think the real special sauce comes when you do, but crypto does not obviate or does not remove the need for legal expertise, and we have amazing law. Goodwin Procter is our primary both credit counsel and crypto counsel, and they have an amazing franchise for both. We evaluate that very closely as we establish these partnerships with originators, and you can't just throw money around. This isn't just as much as Eric might think this might be the future, and I think he might be right. You can't just open up a wallet and grab some cash. You do need a legal contract in place. And, one of the things that I really like about what we're doing is that I think we're actually addressing a lot of the real risks that exist even in the most developed TradFi ecosystems. And I definitely, this is a little teaser for something I want to touch on later around what we think we can do with the data layer in terms of ensuring collateral. It's been very topical in the news, but I think Eric wants to talk a little bit about some of that wallet stuff.
The roadmap stuff, the alpha for us.
Yeah, well, and I think this, somewhat of my first response ties well into the previous question around scalability too. And first off, yes, it is my goal to make lawyers and many intermediaries irrelevant in this whole system. But as I joke with Ryan, you guys will still be present, just with a much more focused and narrow function. He's here, obviously working with them closely. But no, I think in terms of making it scalable, I think it's important to emphasize as well that, unlike most of our competition, we're a fully embedded platform as well, meaning we have enterprise-grade APIs and SDKs that our clients integrate in a way that is very different, at least based on our understanding of how the other competitors work, to where it's much more manual process of getting your external system onto this new blockchain system. In our case, our system becomes the system. And because it is the system, they want to integrate it the same way that they integrated their in-house system, which is all driven programmatically by APIs and SDKs. And back to the earlier point of, if we want the full stablecoin flows through, they need crypto wallets at every level. Our clients don't have off-the-shelf crypto wallets. And so they leverage our SDKs to not just bring the crypto wallets for their users, which will hold the stablecoins and sign the transactions, but these are also what handles applying for a loan, receiving a loan, repaying a loan. And so in that sense, it becomes a lot more scalable as well, because instead of us having to go through manual processes every month to where our competitors are presumably doing the same thing that TradFi is doing, once a month CSV files getting shared. It's all programmatic. We don't have to do anything. The only time we have to get involved is if there's ever an issue with the system. And so, with that, I think being an integrated play as well is key to being able to scale. And we're at the early stages of doing this, right? But at the cusp of ramping up very quickly here.
I think what's interesting, like for 15 minutes, we talk about basically what we are doing using blockchain technology and how we're solving the problem behind the curtain. I think we can also touch base on what the PACT Foundation and what the community is doing for the crypto crowd. And what we're doing is like, if you take MetaMask right now, MetaMask is a 30 million active user base. if you take all the fintech combined that we are currently working with, is actually 72 to 75 million users, monthly active users. And the scale for crypto is what you can do to solve everybody's problem, in a monthly basis. And the biggest problem for most people is, how do I gonna borrow money to grow, get more education, buy tools that help me be more productive and make more money for my family. And most people are not born with the right of a credit card in most countries, like in the US. And what we're solving basically is PACT Foundation is giving an opportunity to everyone with a wallet and an internet connection to access the money markets, to invest on themselves and invest in their day-to-day. The second thing the PACT Foundation is doing, I think very, very well, is creating a huge user base, converting fintech users as crypto users, just by providing new features and accessibility. We call it money over IP. I'm sure we're not the first one to do that, and loan over IP, but that's what the foundation is doing. And actually, talking about foundation, do you want to say a word?
Yeah, I'm Dave Bean. I run the foundation at PACT. So I think at a high level, what PACT Foundation is doing is we're the stewards of the community and the consortium. The PACT Consortium is a series of fintechs, originators, asset funds that all participate and leverage PACT protocol to, do lending in emerging markets and basically the next level of neobanking. At a high level, what PACT is doing is basically what Chainlink did for data, pulling data off-chain and putting it on-chain. We're doing for assets. We're pulling assets that are sitting off-chain and we're bringing them on-chain. This starts with things like private credit, but we recently announced a partnership with Toku where we're enabling earned wage access. So people can get access to the money that they've already earned but hasn't come in a traditional sort of payroll cycle. And you're going to see more and more of these types of products that are coming out that leverage on-chain primitives to just make money move around the globe between people across borders seamlessly and at a lower cost of capital than was traditionally capable with existing market players. So that's sort of my role here.
Yeah, so I wanted to ask Dave, as the crypto native here, hard question.
We have a big team of them, but yes.
Yeah.
Many crypto natives, but I'm one of them.
A couple TradFi.
We know each other from Coinbase days. As someone I know who's been in the crypto native industry for a while, how do you communicate the narrative of PACT to someone who's looking to, as a consumer? I think that's probably the hard question for you guys to answer, because everything I've heard so far, it makes perfect sense, right? You're making neobank model possible, right? For a lot of these fintech companies that already have the pain points broken in the current broken system. As a consumer, how do I participate? I may not want to, lend or borrow, out of a credit facility that has a, 1 year, 2 year maturity. I want quick return, right? Quick kind of, investment horizon. So how does that all reconcile in your world?
Yeah, great question. It's a fundamental challenge with being what is PACT is predominantly a B2B product. So we help originators, asset managers really provide the plumbing to facilitate on-chain token issuance, asset issuance, and payment flows. So the question is for the everyday person, how do you get involved and participate in PACT, right? I think in some ways, the analogy that I used before, where PACT is bringing assets on-chain in the same way that Chainlink brought data on-chain, very few people use Chainlink as a business, right? Very few people are running Chainlink nodes. Very few people are ingesting Chainlink data. But if you believe in what Chainlink is doing and the primitives that it's unlocking, then you want to be able to participate in the ecosystem. So I think there's a very similar analogy to why people should participate in PACT. As a PACT holder, which PACT, the token, potentially forthcoming, but so we're not, necessarily, I don't want to talk too much about the token itself, but in the early days, at a minimum, holders of PACT token will be able to participate in the DAO, which will give them direct access to influence the direction of this movement that we're creating, which is, again, bringing off-chain assets and bringing them on-chain and enabling this sort of new wave of neobanking, right? So if you want to be part of the movement and you believe that this has legs, then we invite you to come and participate in the PACT community.
Yeah. I think, sorry, Ryan, you had something to add.
And I think we talk about what does the end consumer want here, right? And to Fabian's earlier point, the actual loans that are being originated here are enabling, in many cases, very quick access to capital and oftentimes very quick repayment of that capital to a lot more people than even have the, smartphone and LTE technology to listen to this podcast. But one thing that I think is very important here is that, especially coming from a TradFi back, we are reaching an acceleration point where we're going geometric in terms of scaling past where TradFi is or was in terms of access to these things, right? Right now, the loans that we're making, the facilities we're using to, the PACT rails to structure, you can't come in and out of those as if they were a bank deposit. But you also can't earn any yield on most of your stablecoin deposits. We are very close, and as we start to flesh out the entire middle of those curves, we are at a point where you're going to be able to start having access to these yield products in the same or better way than you do in TradFi. As Eric is constantly re-educating me about, there are significant improvements in terms of vaulting, looping, and collateralized lending against these assets that are being unlocked every day. And again, the feedback loop of make capital available, lower the cost of that cap, generate good returns. It's a continuous cycle, and it's a literal flywheel, and the technology is really what's empowering that. And I think that's something that, it is inevitable that stablecoins are going to start providing the same type of accesses, right? There's a reason that, TradFi banks pay interest. Stablecoins will eventually pay interest when the regulation catches up. And in order to make that happen, they're going to have a tiered access to yield, just like a traditional bank does.
Yeah.
Sounds like Eric has something to say.
Eric always has
those are
something to say.
very good answers. But you had mentioned and
Not but, and.
you had mentioned something in particular, which was make a lot of money quick. We're not in the business of that. Mm-hmm. I will kind of as a joke say when we first started, the project, we had joked no one wants to buy, an individual $50 microloan originated in Kenya. Right. And then we were sitting there thinking, we're like, the market seems to love all these meme coin trades, like all these literally like valueless.
The opposite of what you guys are.
The opposite of what we're doing. As Sandra says, on one end of the spectrum, you have fart coin and you have Bitcoin on the other end of the spectrum.
Right.
U.S. Treasury. Sorry. Sorry. We've talked internal, like, should we open up like a meme like platform where people can buy those individual microloans and potentially make a really good ROI quickly.
All right.
Obviously, that's very risky, and so I'm just sort of throwing this out there mostly as like a joke. But no, most of what we're focused on is how can we structure these products in a way and layer them together to enhance the liquidity for end investors while preserving the return on investment.
I really like that answer, by the way. Yeah, I want to tap into your thoughts too, but I think what's really making this cycle different, right, is the institutional adoption and how much institutional interest relies on trust, right? And then a lot of these companies that you partner with are not, like to Ryan's point, are not even Web3 crypto companies. What makes you think like right now might be the right timing to build out this platform?
The technology is in a place where it can be implemented. The market is starting to clue into the fact that this has real value. The regulations in the United States are starting to stabilize, so people know we're starting to know what is allowed and what is not allowed. And there are, Bill Gates famously said, the world needs banking, it doesn't need banks. And, there are all these companies who are finding customers who need a banking service of some sort, and we're building the rails to enable all of those. Now, what gets me up in the morning on this, what gets me so excited, is that this is what we joke that we're plumbers, that we're building this flexible plumbing that automatically, magically moves money to the right places. But what that actually means is that the person borrowing money for their mortgage can get a better mortgage for the same monthly carrying cost. Their borrowing costs fall. Instead of getting a house in the bad school district, they can get a house in the good school district. It's someone who's refinancing their credit card debt who suddenly can afford to repair the refrigerator because their credit card debt is now lower. In emerging markets, it's someone borrowing for an electric bicycle so they can get a job as a delivery person when right now they're on a regular bicycle and they can't get that job. These are real people in the real world. People say real world assets. What does that mean? These are real people with real financial needs, and having better financial plumbing allows them to actually achieve the goal they have in the real world. And, when you ask the question of why should people care about the community, this seems a little esoteric. Yeah, it's a little esoteric. It's the plumbing. Like, no one knows what type of plumbing is in their house, but water running is amazing. And what we are doing, it's a necessity. Hot showers are great.
Right.
And, we are building that, the equivalent in the financial system.
Mm-hmm.
And everyone, we're here, the camera's on so you can see, we're in the backyard of a beer garden in New York. And everyone in this room likely, or everyone in this garden right now, probably has borrowed money. They probably owe some money to someone. They have a credit card, they have a student loan, they have a mortgage, whatever it is. Once we implement this, once this technology is implemented, every one of their monthly bills will be that much lower. And that's very powerful.
Yeah.
And maybe it just is like a natural segue into where we're going from here.
Yes, please.
Right? So we've gotten our technology integrated with all these fintechs, maybe focusing on the use case within emerging markets. Andrew had mentioned one of our partners, actually in Colombia. There's a real example. They lend to Venezuelan migrants living in Colombia that do not have access to the traditional banking system. They cannot take out a loan to upgrade from a pedal bicycle to a motor bicycle for doing food delivery. The data is there. If you upgrade your income 3x's, it's a no-brainer. And so PACT as a credit protocol is enabling that. But where we're going next is, we're working with all these non-bank fintechs, even in some cases, some banks. We've gotten these stablecoin wallets embedded inside these lenders, and they're now starting to ask us, what else can we do with this? We've integrated this technology, what else can we use a stablecoin wallet for? And now all of a sudden, that Venezuelan migrant doing food delivery rides, paying off their motorcycle, when it's fully paid off, now they just so happen to have a dollar savings account that they can hold their money in. That our lending partner can now use as additional data to underwrite that borrower and give them an even cheaper loan next time. And we haven't disclosed this yet, but with that lender, we actually noticed, to Dylan's initial point around the data of the platform, if we look at the chart for this lender of their average loan APR charged to their customers, from the day we started the facility with them, you can notice a significant drop-off in the average APR to these end customers. And so that we're already having an impact with that customer now. And we're just now entering this new phase with the new partnership that I told you that we'll be announcing here soon, to where we're helping these fintechs not just raise capital on fairer terms, but then now, since this technology is integrated, fully evolve from non-bank lenders into stablecoin neobanks effectively.
Yeah. Yeah.
And it's what the industry, it's like the holy grail of what the industry's been promising this whole time, right?
You're preaching to the choir here.
Can I take a beat on that note, actually? So I've been in crypto full time since 2017 through the ICO craze. I've worked at Coinbase, was on the listings team, etc. I think that unfortunately, what the crypto industry is very accustomed to is people with an idea and a white paper going out and like raising money and launching token. And then it's like, okay, can we find product market fit now that we have something out there? I'm surrounded by extremely deeply knowledgeable, talented, I'm relatively recent addition to the PACT team, but what I've seen so far is that the product is working, right? We have receipts, we have on-chain asset deployments, we have loan originations, we have TVL, and then now we're going to help kind of bring the community along. And I think that that's a really, really important reversal from what is typically the model that has, and sometimes it works, by the way, right? Sometimes, getting a dream out there and getting people to rally behind it before things materialize can work, and it's a great way to go to market. But I do appreciate the fact that there's just a lot of tangible, real things happening on this protocol. It's already got a lot of great adoption, and frankly speaking, I think faces are going to melt with some of the new issuances that we'll be seeing in the coming months and years. Yeah, I just want to throw that out there.
Yeah, I think, everything you guys talked about really resonated with me. Personally as a founder, I really want to see more kind of like, what do you call it? Like the left curve, I guess.
40 IQ. Yeah, that's
exactly.
what I represent.
Like the type of non-speculative, PMF that's happening in the space, right? For soon, we're also working a lot on these high performance as a service for enterprises, for governments, build out their own chains. And it may take a little bit more education. And that will be my last question. But it just feels like we're actually going towards the right direction, right? Actually onboarding people outside this existing bubble. Really wrapping up the round here, just trying to understand what is the biggest challenge for you, at this point, towards that success? Is it education?
I mean, I'll pass this off to Ryan right after, but I think it's really structuring, from my perspective, it's structuring the right financial product and doing it in a responsible way and not rushing to, like all of our competition started with, let's offer an asset for the general public to invest in. We've never opened up something for internet people on these blockchains to log in, connect their wallet, and invest in. We've only done private placements with institutional capital providers because we recognize the risk. And I think part of the challenge is structuring this in a way where we feel comfortable meeting investors where they're at, right?
Yeah.
Recognizing that your typical investor on a blockchain is not the same as an institution. They're seeking different things, typically super high yield, immediate liquidity, stuff you don't typically see in traditional markets. But also, people just, they're even down to the nomenclature, right? People like me, I'm a stablecoin yield farmer. I'm used to investing in vaults, not money markets. The difference between them is not that much. I think it's really structuring the financial products. And with that, I'll pass it off to the financial product designer.
I think it's exactly what Eric said, which is you need the structure to be right and you need the nomenclature to be right. And to Xander's point around how we're building the entire plumbing, how we're building the pipes from the reservoir all the way to the spigot and through the boiler, the real difference maker here involves doing the heavy lifting, right? We've had a couple of very big reminders in the TradFi universe recently that all of the things that people, take for granted around the idea that, I'm in a securitization, the trustee or the administrative agent has actually checked that the collateral is there. Well, people have lost billions of dollars in Tricolor and First Brands in the last months because no one bothered to check the paperwork. Sorry, Tricolor was a subprime auto lender that had pledged individual vehicles to multiple securitizations.
I see.
Autos, a car should be one of fraud. So just to be incredibly clear, that is fraud. You should not do that. This is financial advice. Don't commit fraud. If you asked anyone from my entire career, what's the fraud risk in auto securitization? They would have said, well, look, you've got a vehicle identifying number, you've got a loan, you've got a title to that car. That seems pretty good. No one bothered to actually check, and people were sending around flat PDF files and Excel files and CSVs, and all of a sudden it's double pledged, and you're in court suing each other through 3 layers of SPVs and abstraction. First Brands was an auto supplier that borrowed money against receivables. Turned out they never pledged the receivables, and now their lawyers are saying, hey, we don't even know if we even got the $2 billion you wired us. Not to be cliche, but blockchain solves this.
Yeah.
And I never thought I would say that in my career. Distributed ledger technology is perhaps its highest and best use, right? Like checking collateral pledging, having disbursement tied to successful checking of that and execution of that collateral pledging. It's the biggest fix to one of what is clearly the biggest pain points and something that is I don't want to say $1 billion industry, but it's definitely a billions of spreadsheets industry emailed between people and counterparties throughout the year. And that's what Eric and Xander and Fabian and the team are fixing, and why I'm so excited to be partnered with them.
Well, I think if we had more time, we would have, continued this conversation for another hour. But I really appreciate your time here. I think I learned a lot. Certainly very bullish about the project and where you guys are heading. And I love the fact that you guys are letting me get a glimpse of the team, discussion here and, kind of pushing each other forward in discussion. So we might have to do this more often.
Let's do it again.
Thanks for letting me be part of this.
Thank you so much.
Thank you again. Bye.
Bye.
Till next time.
Until next time.
Yeah.